What's up everyone? It's Suhair, and welcome back to the channel. Today, we're diving into some essential financial tips to help you master your money. We're going to be covering everything you need to know, from obliterating that debt faster than you ever thought possible, to building an incredible credit score, to ultimately achieving true financial freedom. So, if you're ready to take control of your finances and start building a brighter future, you're in the right place. Let's get right into it. Now let's talk about debt. It's something that weighs down so many people, but it doesn't have to be that way. There are two powerful methods that can help you pay off debt fast: the Snowball and the Avalanche. The Snowball method is all about building momentum. You start by focusing all your extra payments on your smallest debt, regardless of the interest rate, while still making minimum payments on your other debts. Once that smallest debt is gone, you roll that amount you were paying onto the next smallest debt, like a snowball growing bigger and bigger. It's a great method for staying motivated because you see quick wins early on. But the Avalanche method is all about saving the most money on interest. With this method, you prioritize paying down the debt with the highest interest rate first, while still making minimum payments on the others. This approach can save you significant amounts of money in the long run. So, which method is right for you? It depends on your personality and financial goals. If you need that extra boost of motivation, the Snowball method is your best bet. But if you're all about maximizing your savings, then the Avalanche method is the way to go. Now let's talk about your credit score. It's more important than ever, impacting everything from loan approvals to interest rates. But here's the good news. You don't have to settle for a mediocre score. Here are 5 credit card hacks to boost yours. First, always pay your bills on time. This is the single most important factor influencing your score. Set up auto pay or calendar reminders to avoid late payments. Second, keep your credit utilization low. Aim to use no more than 30% of your available credit limit on any card. Third, don't close old credit cards. Even if you don't use them anymore, keeping them open increases your total available credit and improves your credit history length. Fourth, become an authorized user on a responsible friend or family member's credit card. This can give your score a nice little boost, especially if they have a long and positive credit history. And fifth, space out your credit applications. Applying for too much credit in a short period can hurt your score. Chapter 3. Should you buy a house or keep renting? It's a question that's plagued humanity for ages, but it doesn't have to be so confusing. Let's break it down. Buying a home can be a great investment. You're building equity, you can customize it to your liking, and it can provide a sense of stability and security. However, it's also a big financial commitment. You're responsible for property taxes, insurance, maintenance. Oh, and did I forget the down payment? On the other hand, renting offers flexibility and predictability. You don't have to worry about unexpected repairs or property taxes, and you can easily move if your circumstances change. But you're essentially paying someone else's mortgage, and you miss out on the potential investment gains of homeownership. Ultimately, the best choice depends on your individual circumstances, financial situation, and long-term goals. Chapter 4. An 800 credit score. It's the holy grail of credit scores. It opens doors to the best loan terms, lowest interest rates, and even bragging rights among your friends. While achieving a perfect score takes time and discipline, it's definitely possible if you follow these steps. First and foremost, you absolutely have to pay your bills on time, every single time. This is non-negotiable and the single most important factor. Set up those auto pay reminders, calendar alerts, whatever it takes. Second, you've got to keep that credit utilization low, ideally under 10%. This shows lenders you're responsible with credit and not maxing out your cards. Third, maintain a healthy mix of credit. This means having both revolving credit, like credit cards, and installment loans, like car loans or mortgages, all in good standing. Fourth, be patient and consistent. Building a perfect credit score doesn't happen overnight. It takes time and a commitment to responsible credit habits. And finally, regularly check your credit report for any errors or inaccuracies. You can get a free copy from each of the 3 major credit bureaus, Experian, Equifax, and TransUnion, every year. Chapter 5. Financial freedom. It's the dream, right? Being able to live on your own terms, pursue your passions, and not be chained to a 9-to-5. And the best part is, it's totally achievable. Here's a realistic plan to get you there in 5 years. First, you need a clear vision of what financial freedom looks like for you. Is it being able to quit your job, travel the world, or simply have peace of mind knowing you're financially secure? Once you know your why, it's time to create a budget and track your spending. You need to know where your money is going so you can identify areas to cut back and save more. Next, attack that debt like your financial freedom depends on it, because it does. Use the Snowball or Avalanche method and get aggressive with those extra payments. At the same time, start investing as much as you can. Remember, compound interest is your best friend. That's it for today's video. If you found these tips helpful, don't forget to give it a thumbs up and subscribe to the channel for more videos like this one. And hit that notification bell so you're notified every time I drop a new video. Let me know in the comments down below which tip you found most useful, or if you have any other financial questions. Thanks for watching, and I'll see you in the next one.